title of this webinar is 5 Common QuickBooks Mistakes and what you can do to fix them and how to prevent them going forward. So that's what we're going to start on. And the first thing I want to go over is the customer side of things. Deposits, receiving customer payments, that kind of thing. This is one that all the years that I've been doing training and going out and working with clients and teaching them how to do it the right way or cleaning up their QuickBooks for them. This is something that I've seen them make a lot of mistakes with. Things can get really out of whack, and if you let it go too long, it can take a while to clean things up. And it can cause a number of different problems, and I'm going to go over that. So the first example I'm going to use is, let's say you have a customer. You look at your AR aging report. We go in here to AR aging detail. And you may see the XY company on here for $750 showing up as still being outstanding when you know you received that payment. I know that's not outstanding. That customer doesn't owe me that. I know I received the payment, so why is it still showing up on our report? So let's take a look at how that could happen. First thing we have to do is research, okay, if we think that payment was received, well, where is it? How was it posted? That's the first thing we got to do. So let's go into our chart of accounts. We'll just go into our checking ledger and we'll scroll all the way back to where that we think that payment would have been. And we can see a payment for $750 here. So here we have $750 is what was due. Let's see if that is it. So we right click and edit and we can see, okay, here we go. This is a $750 payment from XY company. The problem is how this payment was put into the system. That's why it's not actually applying to that invoice. So what's happening here is it's getting put to the revenue account twice. As you can see on this deposit slip, it's put in as XY company, but it's put to the consulting revenue category. Well, the problem is when you did the invoice for that customer, it was already put to the revenue category. That's how it works. Go into the customer center here as well, and we'll look up XY company. You can see, here we go. $750 is still outstanding. Here's the invoice, but there's no payment against it. Typically, if there was a payment applied to that invoice, you would see that here. So what's happening is this revenue, not only is the invoice still outstanding, and it shouldn't be, but now you've actually double counted your revenue. If you looked at your P&L and narrowed it down to just this company, you would see revenue in here twice for the XY company. So that's not correct. What should be happening is anytime you receive payment for an outstanding invoice, you do not go through banking and make deposits. You must go through customer and receive payment. So if we go into receive payment, we bring up XY company, we'll see any and all outstanding invoices for that particular company. So here's that invoice right there. It shows it's still being outstanding. So what we're going to do is we're going to go ahead and pay that. Let's go back to the original deposit. It was on 4/29/14, so we'll basically duplicate that. 29. You can fill in all the rest of the information if you want, but it's $750. This is how we actually apply the payment to that particular invoice. Save and close. Go back to the AR aging detail. You see that invoice has gone away. It's not there anymore. It doesn't show as outstanding. If we go to the customer center for XY company, here's the invoice and here's the payment. And the balance is gone. It's back to zero. So now it has been paid. Okay. So now going back to our deposit, what should have happened was after you do receive payment, you have to then put it on a deposit slip. So when you go into deposit, it's going to open up this window that shows all of your payments that have been received in QuickBooks but not yet applied or not yet put onto a deposit slip. So you might have a whole list of payments here that you want to put together on one deposit slip. Check off the ones that you want to. We'll say deposit was $750 by itself, and this is the way it should look right here. When you receive payments, it puts it into a little pot called undeposited funds. And then when you take it out of undeposited funds, you put it on your deposit slip, and that's when it actually goes into the cash account. So what we're going to do is delete this first line where we put it to the revenue category. That's how the revenue is getting doubled up. There we go. So now you have the payment and you have the deposit going in. Everything is correct. So the deposit is still showing here, but now it's going to undeposited funds instead of the revenue category. The invoice shows it's being paid. There's the payment. That's the proper way to do it, and that was how we fixed it as well. So let's look at another example where things can get off. Go back to our aging report again. And you'll see down here for Z Company, we've got an invoice that's outstanding for $450, and then we've got a deposit for $450. Remember, anything on this report is considered outstanding in QuickBooks. It's not been resolved yet. So what happened is, looking at this, I see, well, looks like they probably paid it. It's just this payment never got applied to the invoice. So let's look at how that can happen. Let's go quickly into the customer account. See what we see here. Again, we see the invoice, but there's no payment. There is no balance, so that's good. But on my aging report, I'm seeing this positive and negative 450. That's not what I want. It should be nothing. It should not even show up at all. So let's look at the deposit. We can just double click it from here and open it up. And what we'll see is, it was put to the right company. In this case, it was put to accounts receivable. Instead of putting it to the revenue account like last time, it's put to accounts receivable. So this is better because this actually means it gets applied to the Z Company's accounts receivable account. So that's why you go in here, you don't see a balance due, because it actually did get applied to the customer's account. It just did not get applied to that specific invoice. That's why the invoice is looking like it's outstanding. It just basically looks like their account has an open invoice of $450 and an open credit of $450, which again, they zero out, and that's proper, but they don't actually apply to each other. So again, going back to this deposit, what should have happened is we should not have gone into the deposit screen here. It should have been receive payment. And then after you receive the payment, put that payment onto the deposit screen. And then everything would have washed out. So that's the correct way to do it. The correct way would be just what we did before. I'm going to show you another little trick, though, that will help clean this up. Now that we've got it this way, we could actually receive the payment and then change the deposit. Or we can just go right in, and I'm going to show you a little trick to actually apply this credit to this invoice. And this would work whether it's a deposit that's effectively a credit, or whether it's an actual credit memo you issued, something to that effect. What you can do is you can go into customers and receive payment. If we bring up Z Company, you can see the outstanding invoice right here. We'll check that. If you go down here, you'll also see there's available credits of $450. So that means there's a credit outstanding for $450. So what we can do is go up here to the discounts and credit button, press that. It's going to bring up all the credits we have available for this particular customer. We'll check that and say, yes, we want to apply this $450 credit to the $450 invoice. Hit done. There we go. So now what's effectively happening is you've got a $0 payment. We're not actually receiving another payment, but what was $150 or $450 due and what was a $450 credit are washing each other out. So you just kind of have to go through this step to apply the credit to the invoice. If you do that and hit save and close, now we go back to our AR aging and see those are gone. The positive 450 and the negative 450 are gone. That's exactly what we want. So that's the proper way to receive customer payments, and that's the way you can fix it if you find out that you haven't been doing it the right way. Get it corrected. Next thing I want to go over is something similar, but more on the vendor side of things. Something very similar can happen to vendor payments if you don't record them correctly, then you can have something similar. So for example, let's say you have a vendor bill. If you enter your bills into QuickBooks ahead of time and then pay them later, you may have a bill that's sitting in there and it's showing that it's outstanding, but you know that you paid it. So let's, instead of going to the AR agent, let's go to the AP agent and look at an example. We've got A company down here is the name of the company. There's a bill for $125. And you may look at this report and say, but I know I paid that. I know I paid it. The company doesn't think I owe them money, so what happened? All right, again, the payment was probably recorded incorrectly, and that's why it's still showing. So let's go into the vendor center and find A company. Here we go. We see that they show they have $125 outstanding. Here's a bill and here's a check. Well, wait a minute. There's a bill and there's a payment, so why is it still showing outstanding? That's not correct. That can't be right. I see the payment right there. Well, what you see is a check, and that's a little bit different than a bill payment. I'm going to show you what I mean. Let's open up the bill real quick. See where this is coded to. Okay, this bill is coded to computer repairs. Okay, well that sounds right. And that's where our expense hits. When you enter the bill in, your expense hits your books. So let's look at what happened with this check. We open this check. Oh, well, this check is going to computer repairs as well. Well, what does that mean? Well, what it means is you actually booked $125 to the computer repairs expense account twice. And this check, the way this was done, it's not actually applying a payment to the bill. So QuickBooks basically thinks these are two completely separate transactions that have nothing to do with each other. But what's happening is you've booked $125 worth of expense to the computer repair twice when it really should have been booked once. So this is the improper way to pay a bill. So the correct way would be to go into the vendor once the bill's already entered, go in and instead of going to banking and write checks, you go to vendors and pay bills. What it's going to do then when you do that is to show you a list of all of your outstanding vendors' bills. You can filter it by certain vendors if you want. The list is really big, but here's that A company bill for $125 right here. This is the one we want to pay, or this is one we feel like we have already paid. So I'll check this. Vendors. That this is what we want to pay. Let me go back to this check, find out when it was. Okay, so it was on 4/30/14. So we'll make sure our date is 4/30/14. It's a check. It's not to be printed. We're going to do it now. It's the right checking account. So this is all it takes to actually pay a bill in QuickBooks or record the payment. From here, you could actually print out the checks for the payment if you wanted to, but you don't have to. Hit OK. We'll say we're done. Now let's look at the vendor center, and what we see is here's the bill payment, and then here's that incorrect check we did. So this is correct bill and bill payment, and you can see that the balance due is gone. If you go to the aging report, that amount has been removed. So that's pay a bill. And so then at this point, to fix this, now we've got a bill payment and a check for the same thing. So we just need to go into our check and delete it. Now our expense is only hitting once. It hits when we do the bill, and the bill is paid, so the vendor's account is correct. All right? So that's how you fix those. Very important. How you apply customer payments and how you apply vendor payments is very important how you do it in QuickBooks, because your balances can get way out of whack if you don't do it the right way. The next thing I want to go over is credit card accounts. Some of you may have credit card accounts. You track your credit cards through QuickBooks, and the balance is also out of whack. Let's get rid of this cash account here. We're going to our chart accounts. In this sample company that I'm using, there is a Visa account, and you can see, looking on a chart of account, that the balance is negative $3,500. Well, that can't be right, right? So let's figure out what happened. Let's go ahead and open it up, and we'll go into the ledger for that account, and we can look at what transactions have posted into this credit card account. And what I see are two payments, one for $1,000, one for $2,500. So I see payments, but I don't see any charges. The way an account like this should work is that as charges come through, they should be booked here, and that'll make the balance of this account go up. And then as you make payments on the account, it makes the balance go down. But if you're only doing one side or not the other, then it's not going to be correct. So in this case, someone probably, the bill comes in for $1,000 and they pay the bill and they book it to this credit card account, a Visa credit card account, and move right along. Well, when you do that, you're never actually booking the expenses associated with those charges. So not only is this balance out of whack, but you're not getting, recognition for those charges. So what we should be doing is when you get the charges, go into enter credit card charges. And you can do this individually, if receipts are being turned into you, and you're just going to enter the individual charges one at a time as the receipts come in, that's fine. You can do it that way. That's the most current way to do it, that's for sure. Some people just wait till the end of the month when they get their credit card statement and enter all the charges in that way after they've gotten all of them at once. It doesn't matter. But this is the screen where you're going to do that from. You have the ability to do the charges here or credits here. If it's a refund to the credit card, that's where you do it. Make sure you have the right credit card chosen if you happen to have more than one. And here you're just going to pick the vendor. Whatever normal vendor you would use, just like you're writing a check. Let's say computer store. And we'll say, let's just go with $1,000. And that's going to be computer. We'll just say these are computer repairs as well. For $1,000 that we charge to our card on April 30th. Save and new. Let's do another one. Just use the same company. We'll say Business Supply Center here in this case. $2,500. And then we'll go to the supplies account. So we just booked two different charges. Now let's look at our ledger here and see what we see. Oh, this account probably should have been 2014. That would make it fall in line a little bit better. So here now we've got two charges. On this date we have $1,000 for computer repairs, and on this day we got $2,500 for supplies. Then on July 1st we made a payment of $1,000, which made the balance go down to $2,500. And then the next month we made another $2,500 payment, which made the balance go down to zero. And that's the way it should look. So you've got all your charges over here and all your payments over here. If you pay off your balance every month of your credit card, then you will see your balance go all the way down to zero. If you don't, then whatever the current balance is, you'll see that right down here. It'll always have a running balance. It'll be as current as whatever you've entered in. So, as often as you enter in the charges is what current number you're going to get. So that's how you would fix a credit card balance that is not correct. All right. I'll remind you guys, any questions you have, feel free to go into the chat box and ask me questions. Also at the top, you'll see a little icon with a raised hand. You can give me a little feedback there, where you can ask me to speak louder, speak soft, speed up, slow down, things like that. You'll have an opportunity to ask some more questions at the end. So that's credit card accounts. I'm going to take this moment to pause and ask you guys, I'll take a poll real quick, just so I can get to know a little bit more about you guys and what you do with QuickBooks. And to make it more interactive, make sure you guys aren't falling asleep on me. So I just want to know who does your company's bookkeeping, or do you do it? Do you do it? Do you know you don't do it, or for the most part, but you kind of share it with somebody else? Just give me a little feedback, and it helps me out and know who I'm talking to. All right, great. I appreciate it. All right, so the next thing I want to go into is loan accounts. This is another one that I find gets kind of out of whack sometimes. People have some kind of loan account, whether it's auto loan, a mortgage, line of credit, those types of things. And they come to me and they say, but the balance is all screwed up. I don't understand what happened. So in this sample company, they've got an auto loan here, and you can see the balance is negative 500. All right, so similar to the credit card, let's go ahead and open up this ledger and see what's in here, see how this got out of whack. All right, so what I see, obviously any loan account shouldn't have a negative balance. So what I'm seeing here are two payments. You see the decrease in the payments to CarMax for $250. But with most loan accounts, there should be a beginning balance, right? When you get a loan, they give you a lump sum of money up front, and then you're gradually paying that amount back. That's how it works. So that's one thing that I'm noticing right away is there's no beginning balance. Obviously, if you have a beginning balance, that's going to put your number into the positive. So to do that, it would depend on exactly what the loan was for. In other words, did you actually get a lump sum of money? Or was it used to pay for a car? So you never really got the money. The money went right to the car dealership to pay for the car, and you just received the car. It also would have to do with whether you received it in the current year, that kind of thing. But for the most part, to put in a beginning balance like this, you are going to have to do a journal entry. So to do that, we're going to go into accountant, or we're going to go either accountant or company, either way, and go to the make journal entries screen. If you don't have an accountant's version, you don't have the accountant menu, but that's what we're going to do. Remember, just looking at the date here, so let's make this 4/1/14. All right. So let's just, in this case, it's an auto loan, so we must have received a vehicle, right? And so what we're going to do is we're going to go into the fixed asset account for vehicles. We're going to find that. Here we go, automobiles and trucks. So instead of actually receiving cash, if you'd received the cash, then this would just be deposited into your cash account. But since we didn't actually receive the cash, the money would have gone right from the loan company directly to the car company. We're going to put it as the asset. Now the asset you have is the automobile instead of the cash. It's the automobile. Then the other side of that would be that loan account. Right here. So we're increasing our asset by $10,000 in our automobiles and trucks category, and we're increasing our loan. Loan is a liability. We're increasing that by $10,000 at the same time. That's how this journal entry works. Let's save and close. Let's go back to our register and see what we see now. All right, very good. So now we've got the beginning balance in $10,000, and then we're gradually paying it down. Typically, you just see the payments come out until the balance goes all the way down to zero. But you may look at this and say, but that's not the correct balance. $9,500 is not what it's supposed to be. Okay, my bank statement, my loan statement is telling me it's $9,800. So what happened? Well, this is another common error. The first one is putting in the beginning balance. A lot of people forget to do that or don't realize how to do it. The other is these types of loan are typically amortized. When you make a payment, let's open this payment up. When you make a payment, 100% of the payment doesn't usually go against the principal of the loan. It's divided up between principal and interest, right? So that's something very important to keep in mind as you're booking these payments. Now, some people will try to amortize these payments if they do know the difference between the principal and interest on each loan. Again, this could be an auto loan, a mortgage, any type of loan that's amortized. It's going to be broken up into principal and interest. So sometimes you know the amount, sometimes you don't. It's okay to book the full amount to the principal if you want, and then true it up at the end of the year. A lot of people do that. But if you do that, you just keep in mind that your loan balance in QuickBooks is not going to be correct until the end of the year when you fix it. So let's just say, for example, in this case, $100 of the payment goes to principal, and then the other part is interest. This is how you would book it. You put $100. The total payment is $250. $100 towards the auto loan, and the rest of it goes to interest expense. Let's save, close this, and go back to our ledger, and you see now this amount was $250, now it's $100. So now we would need to do the same thing to this payment right here. Change this to 100. Again, depending on how the loan is amortized, split between principal and interest could change every month. It could be something different. You know, a home mortgage certainly it's not the same every month. But just to simplify this example, this is what we're going to do. We go back here. Now our balance is 9,800. So now it's correct. Now we've got the beginning balance in, and now we've got the payments in with the correct allocation between principal and interest. And now we've got our loan balance fixed, and you just would need to be sure that you're booking the payments correctly as you go through. All right. All right. I've got another question I want to put out there, another poll question. Oops. What do you guys do when you have questions about QuickBooks and accounting? I want to know where you're getting your information from. In other words, you just ask a friend? Are you just searching on the internet? Do you have a local firm or CPA that you're asking for this kind of information? You taking classes at a school? Or are you completely lost and you have no idea where to get the answers that you want? And you're attending webinars like this every now and then. I'm just curious. We want to be able to help you guys out whenever we can. We're trying to put out more free resources on there. We're doing these free webinars. We're trying to put out more information by posting videos on YouTube, little tips and tricks about QuickBooks. So we want to become more of a resource for you guys. All right, I appreciate it. All right, so we have one more, fifth common mistake that I see for those of you who use payroll. This has to do with paying payroll liabilities. And I see this one all the time. Similar to making payments on vendor bills, or similar to receiving payments for customers, there's a right way and a wrong way to do it. And there's another way to do it that seems like it would be right, but it's not. So let's look at this example for this $941 payment right here for $2,666.04. All right. And you may look at this, and QuickBooks, payroll is really good about telling you exactly what you need to pay and when you need to pay it for your payroll taxes. But you look at this and say, well, wait a minute. I know I paid that. I don't understand why that's showing up. I know I paid it. So again, let's see. How do you know you paid it? Let's go look in the vendor and see if we cut any checks to that vendor. For this particular sample company, they actually pay their payments to a vendor called Local Bank. They book it as Local Bank. Here we go, right here on January 14th, you can see a payment for $2,666.04, which is the same amount. All right, so I could see why you would think that would be paid. But again, it was entered as a check, so it never really got applied to that liability. If you look through some of these other payments here, you'll see some called liability checks. That's the proper way to make payments on payroll liabilities, not through the check writing screen. So what you should be doing is making the payments or booking the payments right here on this screen. You should not be going into banking or write checks or vendor pay bills or anything like that. You do it right here from this screen. So you would check the liability that you're looking to pay, and then you come over here to view pay. There are ways to link QuickBooks directly to either the federal website or the Virginia website so that you can make the payments without actually and have them linked right to your bank account, so the money will just get withdrawn right from your account. But you may be doing paper checks still to pay these bills, or you may be physically logging on to the Virginia Department of Taxation website or the EFTPS website to make the payments yourself. And then here you're just recording the transaction in QuickBooks. But this is where you would record the payment. I believe it was 1/14/19 was the date of the actual payment. So this is where you would actually record the payment. Let's save and close. Close this. Now you can see that liability went away. It's gone. Now let's go back to the vendor screen and see what we see over here. Alright, so now we have the liability check and the check. So the liability check is the correct one. That's what we wanted to see. That's what made that liability actually go away. This check, for the same amount, was actually booked to the payroll liabilities account. So in a sense, that is correct. It actually is going to the correct liability account, but it doesn't connect through the payroll module in QuickBooks. That's the thing about doing payroll liabilities through the right check screen. It doesn't actually connect to the payroll module. So the payroll module still thought that this liability was outstanding. So now since we've got both of these checks out there, one is right and one's wrong, so we're going to get rid of the wrong one. We're just going to delete it, and that's how we make it go away. So in the future, always make sure that you are paying all of your payroll liabilities directly from the screen. And the assumption here is that you're doing all of your payroll through QuickBooks. If you're doing it somewhere outside, then none of this really matters. None of this is relevant to you. But if you're doing payroll in QuickBooks, you must pay your payroll liabilities. All right, so those are the 5 topics that I was going to go over today. We kind of went through a little bit quicker, and you guys didn't have any questions, at least up to this point. I'm happy to take some questions. If you do, you're welcome to type them into the chat window. One more poll question for you. Since we are looking to always put out more content, I'm always looking for feedback as to what other topics you guys would like to see me cover, whether it's in a webinar or whether it's in our videos. Again, if you go to YouTube and you search Steiner Business Solutions, you will see lots of videos that I've put out there. I try to put out a couple every month on all kinds of different topics, tips and tricks on how to do this, how to fix that. So I'm always looking for new topics that people are interested in, because we want to put out content that you guys are interested in. I want to put stuff out that's relevant to you guys. I don't want to put out videos that nobody cares about or do webinars like this that nobody cares about. But always look for us. There's lots of content out there. Check out the YouTube page. You can subscribe to the YouTube page. I think that's kind of like in the upper right-hand corner. And if you do that, then every time I put out a new video, you'll get an email notifying you of the video. And then you'll have a link to it so you can go be one of the first ones to see the video. You can also follow us on Twitter, LinkedIn, Facebook. We're always trying to put out content. I mean, I primarily put out QuickBooks related content, but we put out other things as well for small businesses. We try to be a resource for small businesses and give them lots of help. Laws are changing, any little tips and tricks that can help people out. So follow us on Twitter, LinkedIn, Facebook, any of those as well. And we try to put out lots of helpful content. I'm seeing processing 1099s and W-2s. Someone's requesting that. Absolutely. And to be honest, December 3rd, I believe, let me look at my calendar real quick. December 3rd, we are doing a webinar on how to process 1099s. I don't think we have anything planned yet for W-2s, but that might be something we can do as well. But definitely, if you guys are interested in more about 1099s, you should be getting an email shortly from us. You're on our emailing list. If you're here, you'll be on our emailing list, so we'll let you know more about when that is. But I believe it's December 3rd, probably around the same time. I'll teach more about who has to do 1099s, who qualifies for 1099s, how to do the reports, and how to do them right in QuickBooks. So that is coming. And I think that's about it. Any other questions? I'll leave it open for just a minute here. See if you have any more questions or comments. And then when I close out, I appreciate you guys coming by, listening. I hope you come back and attend some more webinars. Definitely please go to the Steiner Business Solutions page on YouTube. Check that out. Look at all the videos we have there. Subscribe to that. Like them. It helps us out. And absolutely give us more feedback. Any new topics that you guys would like us to cover, I'd love to get out there and do that. All right. Well, I think that's it. I appreciate everybody stopping by. This definitely went a little bit faster than I expected. But thanks for coming by and check us out on the internet. Take care.